Live in 5 seconds. Good luck, everyone.
Hey, I'm Sean Kidney. You might have seen me on the earlier when we did an introduction. I'm the CEO of the Klop Bonds Initiative. I'm moderator today for this session on transparency and reporting in the green bonds market. I don't know how much you realise how important this is, but underpinning, in fact, the essence of this whole green bonds and sustainable bonds story over the last 10 years, in fact, it's about 13 years now, has been this idea of reporting. How we tell our investors what we're doing, or what we plan to do, and then how we report afterwards that we've actually done it. Builds confidence in the market, in fact, underpins confidence in the market. Without it, frankly, we would not have a market. Now, we owe a great debt to, in fact, three folks who got this idea of the independent review going. The World Bank, when they did their green bond, their inaugural green bond in 2008. Now, I won't go to the stories why. It's a fun story over a beer one night. Working with their underwriter, SEB organised independent review of their green bond. They got CICERO, the University of Oslo Climate Change Research Centre, to review their proposal for investment of the proceeds of the bond. Investors loved it. And that is the beginning of the story of the underpinning of the structures of a particular market. Now we have $2 trillion, close to, of outstanding in this particular market, with the larger part of it, we'll hear a bit more details in a minute from Miguel Almeida, focused on proper reporting, independent reviews, etc., etc. Work to be done. Today we have a panel that will tease out this issue. But before that, I just want to throw to you one conversation that I had recently from a major investor in sovereign green bonds. They were saying they want more sovereigns from emerging markets especially, which are in the green and sustainable format with reporting and transparency, because even though they get the same credit rating, they want the idea that they can understand where the proceeds are going, that they're going to somewhere which they can look at and check and make sure. That extra level of transparency and reporting is going to become so important for sovereigns. And remember, sovereigns are 55% of global issuance, about more than $55 trillion of issuance globally. So this is going to be the next big growth area of the green and sustainable bonds market. But let's drill down into the sovereigns area. Today we've got four really fab speakers. I'm going to go through them in a minute when we've got them all on screen. But just so you know, Piet Klop from PGGM, Doris Kramer, Timothée Jaulin, Luca de Lorenzo, and Netto, our great collaborator from the Inter-American Development Bank. But first I want to cut to Miguel Almeida, who's our research manager at the Klop Bonds Initiative, just to do a little advert for the report we've done and the kind of work we've done so far to kick us off. And then I'll come back and we'll get going on conversation. So Miguel, I'm cutting to you first. Go ahead.
Thank you, Sean. Hello and good day to everyone. I think our comms team will first go through a few slides, introductory slides, and then I can do my presentation.
Hello, everyone. Welcome to the Transparency and Reporting in the Green Bond Market session. We're very glad to have you with here today. We would like to start by thanking our sponsors, JP Morgan, Credit Suisse, Ping An, Moody's ESG Solutions, Luxembourg, Green Exchange, Citi, Refinitiv, BNP Paribas, IHS Markit, Alliance Bernstein, FSD Africa, Inter-American Development Bank, ICMA, Mizuru, IFC, and Ashurst. And before we start, just a few important reminders. Use the Q&A box to ask your questions. Thoughts, comments, and other inquiries about the conference can be addressed via the chat box, where we have our team ready to assist you. Live interpretation is available in Portuguese, Spanish, Mandarin, and French. The headphone icon is on your screen will lead you to the options. All sessions are being recorded and will be available to you on this app until November. Make sure you use every exciting tools that Swapcard offers. Members of the media, for any interview requests, please visit the Climate Bonds virtual booth. Our comm team is ready to assist you. Many thanks for your presence and enjoy. So over to you, Miguel.
Well, Miguel, go to the next slide, please. We'll come back to the who's in this session in a minute. Just go straight to content.
Absolutely.
Next slide, please.
Thanks a lot. So next slide, please. Yeah. Well, yeah, as Sean mentioned, my name is Miguel Almeida. I'm a research manager in the market intelligence team here at Climate Bonds Initiative. And having done research and analysis of the sustainable finance market here for just over 3 years now, my role is increasingly focused on the topic of reporting. And I recently managed and was the lead author of our study into post-issuance reporting in the green bond market. So today, the idea is I'm going to talk a little bit about our work and the state of post-issuance reporting in the markets, along with where things might be headed. Before I delve into our work, just would like to reiterate what Sean already mentioned, why reporting is important. It may be obvious, but essentially adds transparency and credibility in the market, which is always important, of course, but especially when that market exists to generate environmental and social benefits, and with use of proceeds instruments such as green bonds, where the proceeds finance specific projects or assets, such that reporting is possible more easily. And it is, of course, one of the core components of the green bond principles. So what do we do as Climate Bonds Initiative? Our work for quite a few years has been centered on a periodic study of reporting into the green bond market. We've not yet looked into other thematic debt instruments such as social and sustainability bonds. And in May this year, we launched the third iteration of this study, which had more detail than the previous one, especially on impacts. In terms of process, as you can see on the slide here, we looked at about 700 deals from over 400 issuers, totaling 212 USD billion issued. These were all the deals included in the Climate Bonds Green Bond database issued between Q4 2017 and Q1 2019, apart from securitized deals and loans due to their different reporting expectations and requirements. What do we look at? We look at all the relevant publicly available information on the use of proceeds and environmental impacts of green bonds, which is what makes up reporting. And this is, as you can imagine, a highly manual and time-intensive process. It was a year in the making. We had a team of analysts doing most of the research in 2020, and the results are as of that time. Now, in terms of aims, there are three key aims we have with this study. The first one is to understand what share of the market is reporting, the availability of reporting, and how this varies by region, by issuer type, etc. Then also to understand how issuers report, and here we analyze the quality of reporting as well as various aspects of impact reporting specifically. And finally, to build knowledge and support further market developments. We do also have another purpose, which is to obtain post-issuance allocations, because until that stage, the use of proceeds split in our database is based on the disclosure at issuance, but that's less relevant here. Next slide, please. So what were our key findings with this study? There is a lot to unpack, I would say, a lot of detail in the reports. The results are broadly in line with our previous study, but I think this year we've tried to understand what they mean and frame that a little bit more. And the key messages essentially are, reporting is widespread, UOP disclosure being more common than impacts as is expected. But the timeliness of that reporting can be improved, despite us giving over a year from the end of the cutoff period, i.e. since Q1 2019, until the analysis was done in 2020, a significant portion of the market did not have reporting at that time of research, but they have made reporting available since. In other words, it is very rare for issuers not to report, but quite a few failed to do so within the 15 or so months that we allowed from the end of the cutoff. And larger issuers are more likely to report in a timely way. But the key really is that the availability of reporting in the market is not the main issue. The issue is more the variation in quality of reporting, as you can tell by the chart here, which shows the distribution of quality scores based on our analysis. At the bottom, you can see the scores ranging from 6 to 25 points. And you can see most of the markets scoring at the top end of that range, but there is still a wide range, is the point. And linked to this variation in quality, there is a lack of consistency, basically, in what issuers report and how they report. Now, if we take a step back, this lack of standardization is driven by the largely fragmented nature of reporting up to now, because in the absence of a common framework and format to report, issuers have to independently plan, create, publish green bond reports. And this lack of consistency poses problems, particularly in the impact space, which is more complex than reporting allocations, and where when the data is not comparable and cannot be aggregated reliably, impact assessment across securities and across issuers becomes very hard, especially for investors. So overall, there is a clear need to improve and especially harmonize reporting in the markets, and particularly to enable proper impact assessment. And that's that last point that I will be focusing on today. Next slide, please. Now, if we look at impact reporting, specifically, there are various ways in which the approach to calculating and disclosing impact data varies. And this gives rise to that lack of consistency that I've mentioned. We did a quantitative analysis of the aspects that are listed on this slide. So firstly, whether the impacts are reported for individual bonds or for multiple bonds at program level, whether they're reported for individual projects or at portfolio level, and a subcategory of portfolio level is whether impacts are reported for categories of projects. So for energy projects combined or for transport projects combined, for example. Then actual or ex post versus expected or ex ante impacts, which has to do with when the impacts are calculated or measured versus when they actually materialize. Measured versus estimated being, whether there is an element of estimation in the impacts such as greenhouse gas emissions avoided. Measured is more straightforward impacts like energy generated. We also look at the breadth of methodologies that are used to select metrics and or measure or calculate impacts. And there's quite a few that we list. Linked to that, also the variety of metrics that are used, and not only across categories, but also within the same category. And also noting that the same metric can actually have a different meaning for different issuers. So this is not always clear the exact meaning of the metric, and the same terms can have slightly different meanings. We also collected data on other features, although we didn't do a quantitative analysis of those. And these are the units of impact, so kilowatt hours, tons of CO2 equivalent, etc. Emission factors used for metrics related to greenhouse gas emissions. And then whether or not the impacts reflect the correct share of green bond financing. So mostly when we see impacts reported by issuers, they do reflect the share of financing of those projects that is attributable to the green bonds, but sometimes they refer to the project's total impacts and not the share that's financed by the green bonds. So that's another way in which there is variability in how impact is reported. And as you can tell, there are many ways in which impact reporting can vary. As well as data varying in terms of these aspects, there is also a recurring issue that the information and the definitions supplied are often not clear. Again, if that affects comparability. And all our analysis is on a best efforts basis, depending on what is available. We tried not to make judgments. I should also note that we did attempt to collect impact data itself, with the partial aim initially of creating a data product, given there is a lot of demand for this. But because of this lack of standardization in information that's available and the lack of comparability of impacts, we felt it wasn't really possible to do it reliably at this stage, and it was very complex. So we refrained from aggregating and sharing impact data itself. Moving on to the next slide, please. So given this need for more harmonized reporting, there are various efforts globally to this end that I would have included on this slide. There is some overlap between them, but mainly they fall into two groups. The first one is frameworks and guidance, and there's quite a few examples here. So the Green Bond Principles is the broadest set of guidance, of course, and reporting is one of its key components. But beyond that, there is little specific guidance within the principles on how and what to report. Now, within the guidance that is targeted at reporting, there is more focus on how to disclose impacts over allocations, given this is the most complex part. And the more comprehensive and adopted piece here is the Handbook, Harmonized Framework for Impact Reporting. I'll just be referring to it as the Harmonized Framework. And that's published by ICMA. It's refined continuously. ICMA has actually set up an impact reporting working group with many members, and this working group has been instrumental in developing the Harmonized Framework over the last few years. The framework includes broad as well as sector-specific recommendations, including suggested metrics in each project category, and also with format templates that can be very useful for issuers and investors. And along with the Green Bond Principles, it was also updated in June this year. Two of the key changes there were the addition of circular economy and eco-efficiency projects as a category, as well as recommendations on disclosing entity-level strategies, EU taxonomy alignments, and even climate risks and opportunities such as under the TCFD. Another pertinent example of guidance in this space is the Nordic public sector issuers position paper on green bond impact reporting, the NPSI position paper, which targets public sector issuers from the Nordics, of course, but it can be applied in other contexts. And we do see quite a few issuers, who reference it in other regions. And it is quite similar in scope and recommendations to the Harmonized framework. And these two, especially the Harmonized framework, are the most common in the market, but they still do represent quite a small share. And it would be great to see issuers using them more. Another key initiative is the EU Green Bond Standard, which at the moment is still a proposed and voluntary standard. And it already includes some recommendations and templates to reports. These are largely in line with the Harmonized framework, although with less detail, and of course requires compliance with the EU taxonomy. Personally, I think the EU Green Bond Standard can really help to drive better and more harmonized reporting in the markets, and especially once it becomes more commonly used. And I hope there are people from the European Commission listening in, and they may be interested in working with us and others to this end. Now, we as Climate Bonds Initiative have also provided some recommendations over the years. These are included in our latest report also, and I went through them in detail in yesterday's workshop. So please have a look at that recording if you want more detail on what best practice is, and also how issuers, investors, and platforms address reporting. And finally, there are kind of some other ancillary types of guidance, for example, country or sector-specific guidance and methodologies. In terms of methodology, we highlight many in our reports that are focused on impacts and referenced by issuers, but generally they tend to be not to be specific to green bonds. So there are more general methodologies on how to calculate and report impacts. And these may actually be more useful than the others I've mentioned on this slide, but ideally issuers would be using green bond specific frameworks where relevant as much as possible. Moving on to platforms, kind of a newer development in the market to some extent. And platforms are really able to centralize reporting data under a common framework and a common format and make this easily accessible and usable. They can be very powerful tools, and I think their role will only become more important in the years to come. And there are four key ones I'd like to highlight. So the Green Assets Wallet, which is global and has been around for a few years. We've also got the Green Bond Transparency Platform, which was developed by the IDB for LATAM and officially launched a few months ago, and I'm sure Maria will talk about it a little bit later. The two other most relevant ones are the NASDAQ Sustainable Bond Network, which was also recently launched, and the LGX Data Hub. Another group that I've included here and could be added in theory is regulation. And this would involve mandatory reporting and potentially more formalized or even mandatory guidance. Now, as of now, there is no regulation per se on green bonds specifically, green bond reporting specifically. And I think that's largely due to the widespread adoption of the green bond principles, which have essentially made reporting a de facto requirement in the market. So maybe there's no need for mandatory rules, but of course the EU Green Bond Standards requires reporting. I have not included it under regulation because it's still a voluntary standard, but it's also a good example of broader regulation affecting green bond reporting, because, for example, it requires that issuers confirm compliance with the EU taxonomy. Next slide, please. So, okay, there are several existing efforts, as we've just covered, but where does that leave the markets and what does the future hold? I think kind of important to understand a little bit who we are as Climate Bonds Initiative. So we're an independent NGO, and I think in one way this can actually make it a bit harder to see what is happening within different groups within the market firsthand. But at the same time, it's good because it allows us to see the overall market more as an observer, and that can make it easier to see how it can develop. So from this standpoint, and based on the work we have done, I think the development of green bond reporting will come over two scales or levels that are shown here. The first one is harmonization of reporting practices that is needed, i.e. a common language to understand, especially impacts. And of course, this should be based on what good reporting is, we don't want harmonization of bad practice. But honestly, I think we're not far off from being able to achieve a unified framework in the relatively near term, because the work largely exists. The Harmonized framework and the NPSI position paper are the most relevant and comprehensive frameworks, and they're quite similar in recommendations and scope. The EU Green Bond Standard, from what I've seen, is not quite as comprehensive yet, but it does, what exists is also similar to those two. And of course, it's supplemented by compliance with the EU taxonomy. And then we have our recommendations, again, very much in line with other guidance, as is the work of all the existing platforms that I've mentioned. So the main challenge right now, I'd say, is actually getting issuers to use the guidance, because most of the market still isn't. Perhaps that reflects a lack of knowledge. And then there are also quite a few issuers that don't explicitly reference these frameworks, but that do have good reporting that is in line with them. But in any case, the key issue right now is market adoption of best practice under the existing guidance, and maybe the EU Green Bond Standard could also provide an important push for that. And above all, collaboration will be needed to achieve that. As Climate Bonds, we're also trying to step up conversations with different market participants to contribute to and accelerate this process. Now, looking a bit further ahead into the medium term, there are two broader developments on impact reporting, I would say, that I think are also important to highlight. And from what I've seen, they rarely are. To some extent, they're related, and our report explores this in more detail, so do have a look if interested. In terms of the first one, what I mentioned above and throughout this presentation involves harmonization based on current best practices. However, the current approach, I would say, needs to evolve a bit further if we are serious about really assessing the socio-environmental performance of projects that are financed by green bonds. Because the current approach does not always provide a full, real, and ultimately comparable picture of impacts. And there are two key reasons for this. On one hand, only a subset of the real impacts of projects are generally reported. So generally only the impacts that are related to the project output itself, such as energy generated in the case of renewable energy projects, or passengers transported in the case of transport projects, greenhouse gas emissions avoided, also used throughout project types when there are climate benefits. But beyond this, there's generally no reporting on ancillary impacts on air, water, soil, etc., when these are not the focus of the projects. Now, it is, of course, very likely that these ancillary impacts are much less significant than the core impacts, and they could potentially be negative as well as positive, but one doesn't really know unless they are measured and reported. And ideally, they would be reported quantitatively, because it's good to always understand the detail, but at least there should be a do no significant harm approach, such as in the EU taxonomy, and adherence to the Green Bond Standard will, of course, incorporate this. So that's one issue, the need for more visibility into the full range of impacts. On the other hand, there is an over-reliance on relative metrics as measures of performance. So we define relative metrics as those that are calculated against some sort of baseline or thresholds, such as greenhouse gas emissions avoided, energy savings, water savings, whereas absolute metrics do not depend on these baselines. And that's things like energy used, energy generated, water treated. From the point of view of really measuring and understanding impacts on the planet, i.e. the scientific standpoint, which is what we should be aiming for, absolute metrics are better because they tell us the real impact on the world, right? I mean, global warming, for example, ultimately depends on how much we emit, not how much we've avoided emitting. So absolute metrics, I think, are key. This is not to say relative metrics aren't useful, especially in the near term when absolute measures of performance may be hard to contextualize, including among investors. But absolute metrics should be reported alongside relative ones, and many issuers, and indeed much of the guidance, still don't highlight this. The second broad development, just to finish off, in the medium term is addressing the disconnect that exists between impact reporting among green bonds as European instruments versus entity-level reporting. Right now, the evolution that is happening in the green bond space, and ICMA has now included this in the latest editions of the Green Bond Principles and the Harmonized Framework, the evolution is mainly about issuers providing information about their overall sustainability strategy, and also including information on the EU taxonomy, CCFD, etc. But beyond this, there could be, and I think should be, the objective of using a common framework to assess impacts across financial instruments, across projects, across entities, and even across regions. Because while thresholds to classify performance can vary depending on contexts, and you can see that through tools like taxonomies, which themselves are increasingly seeking a common ground already. There also needs to be comparability between frameworks to measure impacts quantitatively, or even ideally a unified framework to do so. And honestly, there already seems to be some consolidation in entity-level disclosure frameworks. For example, with the merger of SASB and IRC earlier this year to form the Value Reporting Foundation, or IOSCO's formation of a Sustainability Standards Board as part of the IFRS Foundation. And on the regulatory side too, there are developments, the Corporate Sustainability Reporting Directive in the EU, for example. So this is also an important trend that I think will have implications for green bond reporting, but more in the medium term. And finally, why is this important? Because to mainstream sustainability in the real economy and the financial sector, we need to realize that everything we do has impacts beyond what is accounted by private agents in transactions, right? So we also need to assess impacts holistically and use that information productively. Now, I am 100% confident that we can build an economy that not only considers impacts, but is actually driven by the creation of positive impact. And this is more than possible if we design rules with that objective. And it starts, I believe, with a framework to assess performance in a comprehensive and consistent way. Next slide, please. And that's it. That's all I would like to cover. I'm very keen to hear from the other speakers now. Perhaps they have some comments on what I've shared. Thank you very much for your attention, and do have a look at our reports. Please get in touch with any feedback or ideas. And Sean, over to you. Thank you.
Thanks, Miguel. The report's on our website, by the way, under resources. Have a look. And in fact, quite a few reports are coming out during the course of this conference in different sessions. They'll all be on our website under resources. So please look there. It's like a vast library. We now have a bunch of really cool speakers to talk about this issue. Thank you, Miguel, for the outline. I'm privileged to welcome here first, and this is in the order of speaking, Maria Netto, because we've worked so much over the last few years on growing green bonds and on transparency, who's principal capital market specialist at the Inter-American Development Bank. And of course, the person will, hopefully anyway, we'll talk about the green bond transparency platform that Miguel mentioned, that we've had the privilege of working on with IADB and others to grow. We also have Doris Kramer, who's the Vice President of KfW, who Doris and I have been arguing about green bonds, talking about how to grow green bonds for so many years now, including as members of the technical expert group for the European Union. And Doris is also, you may not know this, but a key person in driving the Green Bond Principles Impact Reporting Committee. So thank you for joining us today, Doris. My old friend Piet Klop, who's Head of Responsible Investment at PGGM. It's a very grand title, Piet, Head of Responsible Investment. That sounds like you are in charge of everything. Of course, he is in a certain way. And I'm hoping Piet will prod us in different ways to push how we push things along. Timothée Jaulin, who's the Head of ESG Development and Advocacy at Amundi Asset Management, the largest fund manager in Europe, if I remember correctly, Timothée, and also an incredibly important player in green bonds globally, especially if the EGO fund, which has been a catalyst for investment in emerging markets. And then we've got Luca de Lorenzo, who, despite his fabulous name, is actually working for the Nordic Investment Bank based in Finland. He's been living in Stockholm for prior to that for a long time. He's the head of sustainability and mandate at the Nordic Investment Bank. And they've been very interesting because they've published principles for impact reporting in the past with supported by some other institutions, which have been extremely influential in the thinking to date about reporting in this area. Folks, thanks for joining me. I'm going to start off with Timothée, representing the investment side, the big investment side. I mean, look, I know PGGM is important, Piet, but it's not as big as Amundi. So I'm starting off with Amundi, if you don't mind, getting going. Because, of course, this whole market has been driven by investor demand. That's the point of this market, by asset owners first and fund managers going forward. And despite developments, including, as I mentioned when I started my comments about SEB, World Bank and Cicero working together, kickstart this idea of reporting, which has now developed so much, it is an investor-driven market, at least in the West. And we must remember that, which is testament to the extent to which investors have begun to appreciate the challenge of matching assets and liabilities going forward in the context of the climate change impacts and changes that are coming through. And that's led to the appetite for green bonds with adequate reporting and transparency. I think, Timothée, over to you. What are your thoughts on this and your reflections?
Thanks, Sean. And indeed, I would very much agree. It's been largely driven by investors. Thanks with the help of issuers, of course, and thank you, Doris and Lorenzo, for all the great work that you've done over the years. And the reason for that is that green bonds have particular features that have made them a great success for asset owners over the years. Number one, it's a bond, meaning it's scalable. Number two, it's a cost-effective, impact-focused solution. Number three, it's usually an easy fit within asset owners' allocation. So to me, these are the three key features that really explain the success of the green bond market among asset owners. Of course, taken together with a growing appetite for exposure to green assets to really contribute to the financing of the energy and ecological transition. Having said that, when it comes to transparency and reporting, and in terms of understanding what really investors need, I think we have to differentiate what makes our life easier to what really matters. What makes our life easier is, of course, the emergence of data repository that will offer or make available comparable impact metrics that are made available at the same frequency, using the same baseline, the same methodology, and of course, that enable us as an asset manager to produce impact reporting at the fund level. So of course, this is critical. But in terms of what really matters, and I think we should really not lose sight of what really matters, is actually what the green bond market is achieving on the ground in terms of supporting the decarbonization of our economies. So what I like us to reflect on is to which extent reporting and transparency are actually critical drivers in order to make the green bond market fostering faster decarbonization on the ground. And for us, it's about engaging issuers in terms of what is the level of alignment between their overall strategy and their green bond framework and the green assets they're financing. Transparency and reporting enable us to do so. And it's also about focusing to the extent possible on the most additional parts of the market. And very often, the most additional part of the market where issuers need to do more, where they basically need to do the first steps on their sustainability journey, are typically the areas where transparency and reporting practices can be improved. But this is where we should focus, actually, because we need to be in capacity to drive energy transition in emerging, or to support energy transition in emerging markets. We need to support energy transition across real assets that have a hard time to get financed closer to us. And of course, I'm talking here as well about mid-sized companies and small cap enterprises. So it's really working at the two fronts. Transparency and reporting matter, and we are encouraging the best practices, but it's not all about making the life of asset manager easier. It's really about focusing it in order to drive decarbonization on the ground.
This is a critical comment, Timothée, and I've had a couple of interesting conversations the last couple of days about the application of the European Green Bond Standard and taxonomy and finding the right balance between necessary and relevant reporting and stuff that would be great to have, but it's hard to do. So it is a live question. Thank you for your remarks. Of course, Doris, if I can go to you, you've actually been instrumental in a lot of this thinking, and KfW is not only a significant issuer, a very significant issuer in the European market, helped kickstart the German green bonds market through that issuance. You also have an asset manager investment arm, which has been a significant investor. So you're playing both sides of the coin in this one. But most importantly, you've done a lot of work with the green bond principles and thinking through impact reporting. So tell us how you see things going and what you see the key issues are. And also maybe come back to Timothée's comments about finding the balance. How do we find this balance, given you've really been at the front edge of trying to make this work in Europe? We've got audio.
First of all, thank you very much for having me here on this panel. And yes, impact reporting is really at the very heart of not only myself, but also of KfW. And if I might not start with an outlook, but with looking back a little bit, when KfW started issuing green bonds in the year 2014, we actually were in a very lucky position that for the underlying assets we connected to our green bonds, we already had an impact evaluation. Being a promotional bank, we actually are required by the German government to report on impacts to our owner. So we had a loan program for renewable energy, and we already had an impact reporting in place, which we could use. So when issuing a green bond, we already could give an estimation on impacts estimation on impacts to be achieved by investing in KfW green bonds. And I still remember very well that by then there was quite loud outcry in the market that KfW started issuing a green bond with providing impact reporting information right from the beginning. And I vividly remember the discussion that many market participants were of the opinion that impact reporting would not be possible. The challenges would be way too high for normal issuers to provide reporting on impact. And I think it's been a great journey since 2014 when we started reporting impact till today. I mean, what happened in the meantime? In 2015, a group of multilateral development banks and KfW, we as National Development Bank, were actually asked to join that group. We developed the first guidance on impact reporting for the green bond market, the so-called Harmonized Framework on Impact Reporting. By then, the most relevant categories to the green bond market were renewable and energy efficiency. So these were the two categories we focused on in the beginning. And during COP21 in Paris, we published this document, which gathered great attention from various partners because it was a guidance document giving information on so-called core principles, which are more general on what can be expected from issuers when reporting impact, but at the same time giving very detailed information what kind of impact we do expect to be reported for these categories. And coming back to what Miguel has said, that absolute impact is crucial and not relative impact. I think what we have done right from the beginning was actually asking for both. We were asking for actual, for absolute figures. For example, how much capacity of renewable energy has been installed. But we also asked for relative impact CO2 reduction, because we think it's actually, it is relevant also to put it in the bigger context. If you are in an environment where the quota for renewable energy, for example, is already extremely high, then of course the impact of a bond financing renewable is different than if you invest in a country where renewable is still at a very low level, and the impact is different. So we think, and we are convinced, that reporting on both actually is very important. What happened after 2015? ICMA took up the impact reporting discussion And we've built up an impact reporting working group, which was also already mentioned here. And we've been at KfW member of this impact reporting working group right from the beginning. And we started working on further categories because the green bond market is not only about climate. The green bond market actually it's a concept, the use of proceeds concept, which should also be used not only for climate related, but also for other topics. So we've started providing guidance for water, for waste, for transportation, green buildings, biodiversity, adaptation, circular economy. And I can only recommend to look at the Harmonized framework, because you will find the approaches are not always exactly the same. We do always have some core indicators, we have additional indicators, but how to come up with core indicators is different depending on the environmental objectives you are pursuing. In some categories, the local context is extremely important when looking at determining your indicators. What we've also done is providing templates in order to make it also in the long run easier for investors. That you have got templates very well. We think they are not completely simple, but they should be manageable for issuers to be filled out. So you have to provide information on the bond you're reporting referring to. You have to give information on the amount you are investing, but also on the total project cost, in order to make sure that issuers actually do not attribute the whole impact of a project they are co-financing with others to themselves, but that there is a proportionate allocation and so on and so forth. And nowadays there's only one category left. So we are, and I think I also have to mention EBRD, who have been very, very active in this space together with KfW to get things pushed forward. So the last category we are looking at now is sustainable management of living natural resources and land use. There is no overlap with biodiversity, obviously, but this is the last category to cover. And what we've also done on the impact reporting side, and I think it's great also to have Maria here, is that we have provided guidance for impact reported database providers, because there is an emerging infrastructure coming up, and being an investor ourselves as well, we highly appreciate this. And we do agree a lot still has to be done in order to get data comparable and to be at a point in future to be able just to add impacts that have been reported by issuers, which from our perspective currently doesn't really make, I don't want to say it doesn't make sense, but data is not comparable. So whatever figures are reported on a portfolio basis, it's a bit like putting apple, pears, oranges, and so on and so forth in a big basket, and then you come up with something out of this basket. And last but not least, maybe one further point, which also I think nicely fits to what Miguel has said previously, on overall assessment of issuers and overall reporting of issuers. I mean, when we started, we had this impact reporting in place. The calculation done was externally, and we think it actually adds to investors' confidence if there is external review or external calculation. But to be very honest, I mean, it's also got to do with internal know-how. Who actually is in a position to do impact calculation? And I mean, we at KfW, people might think that we are at the forefront, but even at KfW, we are still on the learning curve, and we've just started a project the project started about 3 years ago, but it took us about a year to come up with a conclusion. We have to become more transparent on overall impact of the whole corporation of KfW. And we are now working in this project with many manpower to come up with reporting of impact and for the whole KfW group. And we think that will be the next step. So Miguel, thank you for bringing up that point. we're also very much very hard pushing to get the green bond principles amended to focus more on issuer level. It has been a lengthy discussion because the concept is a use of proceeds concept, but we were very clear that sooner or later people will also have to focus on issuer level performance, and it very much will add to credibility. And I think I will leave it by that. We hopefully will have still much time for discussion later on, and back to you, Sean.
You've raised some interesting issues. Murray, I'm very keen to hear from you about the transparency platform, as Doris talked about, and how you address these issues. But I'm going to jump to Piet first, because the entity level stuff is really interesting. We'll be publishing a paper on Friday, I should say, around our thinking around entity level assessments, bring it into the certification using infrastructure for sustainably linked bonds and so on. But of course, Piet, you've been wrestling at this issue for ages at PGGM around how you look at your overall equity investments and assessing companies going forward, as well as growing the use of proceeds bond market. Where do you think we're at in terms of this issue of reporting and transparency and giving you enough tools, adequate tools, to be able to make these assessments across PGGM's portfolio?
Yeah, thanks for that, Sean, and thanks for having me. Now, this is indeed very close to our hearts. It's the entity level stuff, and also the orientation toward outcomes. I think that matters here. We first, of course, want to establish whether a company, the entity, is determined to produce the sort of outcomes we desire. And you always look, through the keyhole to a company, right? Either as a bond issuer or as through its equity. Is it the entire company, or is it just part of it that's dedicated towards impact and outcomes? And is that part then a fig leaf, or is it a start of something bigger, something good? So these are value judgments and that we make all the time. And of course, we've established internally a set of rules that guide us to establish whether or not this is good enough. Now, I don't think we're in the clear on that anytime soon, and the rules are being fine-tuned all the time. What we do believe, however, is that what is important when it comes to gauging that part that we believe is good and is serving the SDGs, for example, or the Paris Agreement, outcomes, the orientation towards outcomes is a very important part of that. We believe that, and we've been working at this for years now, that absolute outcomes, as Miguel said, is indeed the yardstick. In bond markets, as much as in equity markets, there's plenty of relative rankings, scores, etc., that are valuable in some ways, but are often on a slippery slope towards greenwash. So we certainly believe that, in that link from outputs to outcomes to impact, we have to strive towards impact. And that includes, as Doris just said, that includes the context in which these outcomes are being generated, right? It matters whether a bond serves clean energy in a place that is desperate for it or in a place that's already well served. So we ultimately like to arrive at some absolute outcome, an absolute impact that we can measure as CO2 emissions avoided. That is ultimately what we want from our bond investments, but also from our equity investments. Now, it's not easy. And what we see in the market is that this sort of thing still suffers from, the familiar litany of lack of standardization, etc. What we believe is a critical point is the ability to aggregate these outcomes or impacts, hence the importance of absolute outcomes. And that is true for our bond portfolio. It's also true for the overall portfolio, including our equity investments and private market investments. We want to come out, PGGM is a pension fund manager, right? So we want to come out to our beneficiaries with your pension savings have delivered this and this and this outcome measured against the SDGs or Paris alignment, Paris Agreement, etc. So we don't necessarily want to make the distinction between different asset classes at that point, right? It's a communications tool, and we want to be able to aggregate these absolute outcomes or impacts across all the asset classes. Maybe I'll just leave it at that. Then we can discuss about the finer points of this data. Perhaps.
Yeah, no, it's a good point, a good picture. And hey, thanks for stating that so clearly, because I think you represent the benchmark of what you do. I do want to pick up Timothée's comments, though, about how we make this work for emerging markets where there are fewer data points. It's nothing else. But maybe that's a good point to cut to Maria with this transparency, green bonds transparency platform, and the work IADB's been doing across Latin America to grow green bond markets. And Maria, your thoughts?
Thanks a lot for being here, and it's great to be among a lot of good friends and colleagues here. I think a lot has been said about the need for comparability, to aggregate data, the concerns of the investors and the issuers. The Green Bond Transparency Platform comes a bit for addressing all that in a more kind of, say, holistic way. No? On the one hand, we saw Latin America and the Caribbean having still a market that is emergent on the green bond. It's still relatively small compared to the world market. And so we see the importance of the impact reporting and the demonstration on what these assets are doing as key for the market itself to develop. So not only for the investors themselves to be interested in investing in these bonds, but also issuers to be more enthusiastic to go to the market and better guided to do so. No? With you guys, we have done a report 2 years ago about the reporting of the Latin American bond market. And at that time, the reporting was really bad, to be honest. About only 50% of the issuers were actually reporting what they were doing in terms of use of proceeds. There was very little reporting about the corporate. I think what Doris was saying, that, increasingly, it's not only about the fact that we have to have more clarity about the KPIs, but also of what is done with use of proceeds, but also investors want to know what the issuers are doing, how the corporates are doing. This adds more complexity, and at that point in time, we saw a market that was not as well developed. I think the good news on what Miguel reports today to us is that at least all the issuers now are reporting. But we have this problem of the lack of comparability still, and then the problems that were highlighted here. If we want to demonstrate that as an aggregated market, if we want to demonstrate that the green bonds as such create a greenium, a value that is worth the investment, if we want to demonstrate that all this effort is responding to the Paris Agreement, we need to start promoting more comparability. There is a lot of efforts, and I think all this conversation we are having here is crucial on trying to have common frameworks, on trying to achieve for more standardization on taxonomy, but there is still a lot of confusion in the market. And I think where platforms like the Green Bond Transparency Platform come is that we offer basically templates for issuers to be able to actually report and see how others are also reporting, so that they can see the different dimensions they have to provide this information. We incentivize through the platform the possibility of tagging to different types of taxonomies, and in a way promoting already comparability where sometimes in principle there is not. So by already guiding the issuer to report directly electronically, we help them to also think about those taxonomies and how they relate to them. And we try also to incentivize, although this is an area I think we need still to promote a lot, the second part reviewer at the moment of the issuance reporting, which is not always still being done. No? I think there are a lot of challenges still in terms of how can we create better linkage of those kinds of platforms as we are developing in Latin America to the actual markets. We are very happy that, for example, the Green Bond Transparency Platform actually is linked and has been working very closely with NASDAQ in Luxembourg. But how can we make that more kind of global, no? And how can we also respond with the platform in the speed needed on all these discussions that are happening in parallel with the frameworks? And how can we use the platforms also to better link to those movements that Miguel was saying at the beginning, you know, with IOSCO, SASB, and others that are trying to promote anyway this standardization. In our view, the market needs this standardization, not only because investors are looking for that, and we want to promote the market, of course, in our case, the Inter-American Development Bank, the Latin American and Caribbean market with investors, but also because we want to promote that the issuers see that this market is a good market, is something useful, and that they can actually use this market to show what they are doing in terms of Paris Agreement and green impact. No? So I will stop a bit here, but basically what I wanted to highlight is beyond just investor issuers, there is also the need to develop the market as such. And if we don't have clarity in terms of transparency and what the bonds are doing to respond to the actual global challenges we have, we can have also very quickly the opposite, no? The criticism that the markets are not doing what they are supposed to do. I mean, again, an investor will invest in a green bond because they expect it to be green, else they will invest in another one. No? Thank you.
Thanks, Maria. Thanks, Maria. There are so many issues here. I just want to go to Luca now. Luca, you've been, I'm going to call you a thoughtful commentator on the market, reflecting on how it goes. And of course, NAB's played this role in the past. So take a big picture. Given all of these comments, what do you see as the critical issues going forward? And I do want you to pick up this tension between the quality of reporting and the challenge of doing it in markets where the available data is thin on the ground or the nature of reporting is hard, as part of your thoughts. But having said that, brief, over to you.
Thanks, Sean. And again, also from me, it's a pleasure to be here. Of course, being the fifth in line, I need to think hard how to add something valuable to the conversation. But I'll try to do that and share some of NIB's experience. It's actually our 10th year anniversary this year of our green bond program. So we kicked off in 2011, issued a few bonds, a couple of blue bonds as well. And as you say, Sean, I'll start actually by picking a little bit on Timothy's comment, which I thought was very relevant. We all know that we need consolidation, measurability, comparability, but at the end of the day, what really matters is that, you know, the impact data that we look at, also for us as a bank, actually drives our decision making in terms of which assets, you know, are green, which ones do we put in our green bond portfolio. And I think that's the starting point for you guys investors, right? And we shouldn't forget that. And so I want to stress our experience in the fact that to do that, before you get to the external reporting, you know, which is the tip of the iceberg, there is a lot of internal work, internal systems, dialogues with the clients, understanding and assessing projects, as you mentioned, Doris, and really making sure that you apply the methodology coherently, consistently, and you get the right data. Because impact data is at the heart of the flow. So the quality of the data, reliability of the data, and the flow of the data for a bank, all the way from the project to you guys as investors, is what matters, right? And that needs to work. And that we have developed at NIB quite a bit in over the last 10 years. And in general, I think all of other issues, not just us, have developed that very good there. Now, once you have that sorted, so if your internal processes are working and so on, and you're making good decision making, as we discussed still, and as you mentioned, Sean, then it comes to the fact that you might have a lot of metrics, and a lot of data points. And so how do you then keep the importance of the impact, but make it digestible for the audience, right? And keep it simple for you investors, but, you know, could be other audiences as well. And it gets tricky, and very quickly gets tricky, because the metrics, you know, you multiply here and there, and suddenly you've got 40, 50 things you want, or even more. And so that is a bit difficult. But there again, three things that we're trying to work on. One is consolidation. So we used to have a green bond, a NEB, we call it NEB Environmental Bond Report. We had an activity report, and we started doing some TCFD and climate report. As of last year, we have created an impact report. So we try to consolidate information all in one. Okay, that's one way which I think is the right way to go. It's still a bit longish, the report. There is something to do there, but at least it's one. The other one is the ability to toggle. I think that's something, and I would be interested to hear from the investor's perspective. And what I mean by that is being able to have aggregated figures, but being able to deep dive at project level, right? If you need to or at sector, right? And so this ability to toggle, in the impact data sphere, and that we have done by using a little bit web-based solutions, where you can click and we have project level data versus portfolio level data and aggregated data and so on, which you find in the report. But I think that's an interesting concept going forward. And the last one is that what you mentioned already also, Maria, around what I call digitalization of impact data. So, let's try to be smart in using technology platforms. They could be third-party platforms, which would also help comparability. It can also start with your own if you have the ability. But let's try to use digitalization and technology to be able to, simplify the visualizations and so on without losing information, right? That is something that we're working. So we're working. You had them on the slide, Miguel, with Green Asset Wallet and NASDAQ, which are developing these platforms and so on. So those I think are our reflections. And I would like to go back and have a conversation now. But before, I would like to conclude, Sean, with stressing what you opened with. That we also believe that transparency is basically at the heart of sustainable finance, right? Without transparency, you lose the trust, and then the market just doesn't work. So this is it's core that we get this right, and I think we are getting it right. But if we continue to get it right as we move forward, so that's good. Thanks. I'll hand it over to you.
Thank you, Luca. We've got a few practical issues we're facing now in Europe. Doris, we've been talking about the need for grandfathering solutions under the EU taxonomy and the EU Green Bond Standard, so that investors like PGGM, when they're reporting to the ESMA and the other regulators, can include green bonds they currently have, subject to meeting substantial contributions. There's quite a lot of loose ends here, aren't there, in terms of things we have to do to make the European regulation fit to the needs of investors. But maybe a broader question, and maybe it's back to you, Timothée, is given what you've heard today, what do you think are the things that we have to fix to make this doable? And I've got a particular eye on emerging markets. In the sense of Europe, we've got some capacity and some data availability and data points we can do much more. But if we want to encourage issuers in India, in South Africa, in Peru, what do you see as the issues? I'm going to call it the points of the frisson that we need to fix in this thinking that we've got at the moment around reporting and transparency. There's no debate about the need for transparency, but this issue about what the specific aspects of transparency we can do now that will grow the market rather than make it harder to grow. Give us some flavour.
It's hard to find one or even several silver bullets to address those challenges in challenging markets, basically. But I think Doris, as well as Luca and the others, made some suggestions that I think are very relevant in those markets. Number one is actually understanding what is driving investors' demand. That is critical. And to me, we are at a turning point here. Of course, investors expect a green bond to be green. Therefore, they will look at first and foremost the quality of the framework, and which is a way eventually to assess the quality of the underlying assets. But I was saying that we are at a turning point because I believe investors no longer expect only a green bond to be green. They expect a green bond to actually make a difference. And we really have to think collectively about linking the green bond market to actually a highly impactful market. What that means for an emerging market issuer is that they need to understand the level of transparency which is required, but they need also to understand what kind of quality of assets investors will require or expect gradually to see as eligible in the green bond program. But they also need, and this is really, really, really critical, to understand that we expect to see gradual alignment between the corporate strategy when it comes to climate, environment, and the other transitions which are needed, and what is published and advocated in the green bond framework. We manage more than 30 billion, if you want, of green bonds globally across our operations. And for us, the number one risk is not necessarily the greenness of the underlying assets. Is actually all the actions corporate can take that really go against the purpose of the green bond framework they have set. And that does not contradict the green bond framework they have developed. Sometimes we see great green bond framework. We see great impact reporting. We see great quality in the underlying assets. But if, on the other hand, the corporate is financing assets which are clearly not compatible with a 1.5, even a 2 or 2.5 degree trajectories, here we have an issue. So I think good understanding of what investors want is critical, and with Piet, but also with the other issuers, because issuers look at their peers. We need to be very clear and vocal on that. Second, to Doris' point, it is clearly about the ability to develop the tools to actually put in place this reporting, to assess the impact of the project, etc. That requires an infrastructure, a team dedicated to that. And to us, this is clearly one of the value add, actually, of implementing a green bond program. This is clearly where we see the impact in terms of progress on the sustainability journey of issuers. And here, collectively, we can do more in terms of providing technical assistance to these issuers. I'm sure the EU and the European Commission in particular had a great focus on what's happening in the EU over the past few years. But tomorrow, I hope, and actually I expect them to also focus on emerging markets and really providing or sharing, if you want, their know-how, their experience, and making sure that the markets progress in the areas where it's needed. And it's, of course, about the private sector, but also about sovereign issuers, where we need to link sovereign issuance to meaningful indices.
This is a bit challenging because the green bond market has grown upon the idea that the use of proceeds are what count, and they're separated out from the issuers. And of course, we've got lots of issuers in the market who've got fossil fuel investments who will do, well, not a lot, but a few, like Repsol or National Thermal Power Company in India, for example, that runs which is a state entity that runs the coal-fired power stations. And there's certainly an argument that the issuance of green, particularly the benefits they get from issuance, changes internal cultures and encourages them to do more. So my question to you is, while I understand the need for, or the push, especially the engagement side, and isn't it exciting to see fixed income investors getting into engagement, not just equity investors now, to push the organisation to change, if you link it too tightly with the organisation having its solid entity level plan, then you squeeze out a whole use of proceeds and you squeeze out the catalytic changes that come with the use of proceeds market. So that's a question to anyone. Please put your hand up if you want to tackle it. Of course, the other side of the equation is we want to encourage entity level, and one of the things we're working on, as you know, is how to recognise entities in general. Maybe we'll be able to do something with KfW by the time Doris's project is finished about this to support it, because we do need to signpost those, and we need to get to a stage where all the fixed income from an entity can be included because of the entity transition plan. But they can be challenging, right? I mean, there's a lot of organisations, including sovereigns. I mean, is there a sovereign in the world, at least a large economy, whose ambitions around climate are actually fully adequate to meeting the Paris Agreement? I'm going to argue I don't think there is. So if you were tough on that, and that includes Germany, by the way, and if you were tough on that, then you would have to squeeze out the use of proceeds bond issuance. Wouldn't you? Or have I missed something here? Luca, you're smiling so much, I've got to ask you for comment. Is there something in this, or is this a crazy discussion?
No, I'll intervene. No, I was laughing because I think you're right. It's a balance, right? But you're saying we need to get tough and squeeze. But maybe this time we have to be tougher, right? That was why I was laughing. But on a more serious note, I think I tend to agree a little bit with Timothée's point. I don't argue against the fact that the green bond, even in, let's say, browner corporates, right, has had this ability of having internal conversation, education, and has this catalyzer effect. I think all Timothée, if I understand correctly, or anyways, that the way I think is that today you just ask that to be explicited. Right. So you say, okay, we want you to be aware that you're setting up this green program and tell us explicitly how it fits in a transition strategy. And then that strategy can be, and that transition can take time. It might still have some brown assets. That's okay. But let's have an explicit conversation about it.
This is why I said gradual. And it would be meaningless if we were only investing into green bonds. You should buy already green issuers. There is additionality when there is a need for transition. So the gradual, if you want, churn is critical. But nevertheless, you need to take an active stance to start this conversation.
I might.
Go on.
Go, Doris.
If I might add one point, also at the Green Bond Principles, we had lengthy discussions whether there should be a separate market segment for transition bonds. And at the Green Bond Principles, the vast majority actually said, yes, transition is very important, but transition, on one hand, can be financed via green bonds. We need transition. Not everything isn't yet dark green, and we still need this transition period. And that's why we developed at the Green Bond Principles not separate transition bond guidelines, but what we clearly stated is, and we provided a document on transition that issuers should put their overall activities in the context and how they, at an issuer level, intend to transition themselves in order to become Paris aligned in the future. So this clearly opened the door for issuers who aren't yet Paris aligned. And to be honest, I think the green bond market would be hardly existing if only already now Paris aligned issuers would be financed via green bonds. But we come back to the point of transparency. You have to tell your story. You have to have a story. You have to have a plan.
Go on.
Maria, go.
I think on the technical cooperation, when we were talking about emerging markets, we are in a different moment, in my view, as well. Some years ago, it was a lot about what you were saying, Shan. And from IDB, we supported about 30% of what were the bonds in Latin America. Indeed was what you were saying. They are getting into the market, they learn to do the framework, and we hope with that they will do more. But I do think that today we have to be very responsible that the expectation is higher. So when you are going to do your issuance, you should upfront already think about what corporatively you are doing beyond just what is the issuance itself. And you also have to start thinking up front how we will report that. That was not the case 5 years ago. And I think that's the difference today. When we talk about technical cooperation and somebody going to the market, it's not anymore just the expectation of having a nice framework. It's about having a framework that demonstrates also what the institution corporate itself has to show and demonstrate the impacts. Now, I think just to touch on this corporate issue, that's an area that I think, even though we have very good developments on all these frameworks we're talking here, this is an area that we still have a lot of confusion, though, from the side of the issuers, and where I don't see still very clear taxonomy and transparency. ESG ratings or the types of assessments that are being done about corporations, about institutions, are very often done unsolicited with not very good data. And our experience as IDB recently was in supporting very large issuers actually in the region, that we had to support the whole ESG rating as a very important part of their issuance, actually became the most important part in terms of technical cooperation. And again, there is not really a standard, and different reviewers can have totally different assessments. So that's maybe an area we need to tackle more, thinking in the future on how we are going to report and promote transparency as well. And the sovereigns, I think, is a very good point from you, Sean. Particularly the sovereigns is a very tricky issue as well.
We've got some challenging sovereigns coming up, but of course that's one of the things in the Green Bond Transparency Platform that we've tried to do, have templates, have common approaches and so on. And I guess we can have quite a lot of complexity reporting as long as we make it easier or relatively easy for the issuer to understand, and we build comparability. So this work by the Impact Reporting Committee and various investors on agreeing on common templates is really important to make this forward. But the leaching across the sovereigns, of course, is the fun part of this, right? I have to say, Timothée, I'm so excited with this conversation because, can you imagine that 2 years ago we would have had this? No, we weren't ready. The market was small. But now we have a large market and we do have this palpable interest in engaging around what entities are actually doing. The sovereigns is challenging, though. I mean, we expect to see green bond issuance from multiple Latin American countries, as well as multiple markets around the world, some of which are very high carbon in terms of their current economies. So how do we manage that in the short term? We're saying, yes, you've got to have an NDC. Everyone's got an NDC. I mean, poor old Pakistan, when they did their first NDC, it was 1 page long after the Paris Climate Change Agreement, but it was an NDC. So we have to have a quality assessment process behind all of this. So I think we need a bit of work on this to make this work at a sovereign level. Doris, what do you think? Is this something that you're looking at the GBP?
Maybe on a more general note, I do agree on the sovereign side this is going to get extremely interesting. But to be very honest, I think it's not that different from the decision of a sovereign to issue a green bond to the decision of another issuer to issue a green bond. Mm-hmm. Because also at the sovereign level, all of a sudden, various parties in charge of spending of a government start working together and start trying to come up with ideas on what kind of project actually can be financed by a sovereign green bond and how to set up an impact reporting of sovereign green bonds. And just the fact that they start thinking about it and then they start issuing green bonds, I think this is actually gonna further gonna support also the development of the sovereigns, because they have to become more transparent than they have been in the past. And they commit themselves to the capital markets. And I mean, not only for emerging markets, but definitely for all countries, the capital markets, the capital market is the source of funding for the sovereigns. So if you spoil your reputation at the capital markets, you are running into huge problems. So they take it very serious. And all of a sudden, I think so many different parts from the government start working together. we are very much in favor that sovereigns enter the green bond market, and we think this is actually gonna help sovereigns, and I think their commitment will increase over time. It should be higher than it actually is. I do agree. The NDCs are definitely not sufficient to achieve Paris alignment, but now starting issuing green bonds, you are in the focus of even more in the focus of your investors.
It looks a really good point. And of course, we've got proof of case. I mean, Indonesia, for example, has had a run of green sukuk, large-scale Islamic bond approaches, which have been very successful, despite Indonesia having a very brown grid in terms of made up of fossil fuel investments running the country and the transition being achingly slow in Indonesia. So in terms of market response, been positive. But this idea that we're looking for more upfront commitment, at least, by entities such as sovereigns, is an interesting idea. We're going to see issuance, I think, my hunch is later this year from Russia. We saw a test run when Moscow issued a domestic green bond, and of course Russian railways have issued in the European market. So how will investors respond to a Russian sovereign green at the moment? Piet, want to take a stab at that one? I'm just being provocative, of course, but it is a real likelihood.
Yeah, exactly. Yeah, Russia's probably going to be a hard one. I can see the tension in either the transition or the emerging markets perspective on this, right? I do believe, though, that even when it comes to Russia issuing a green bond, the proof of the pudding is in the eating, right? And I like that idea of toggling different impact metrics, perhaps. You know, core and more is another phrase that we've been using. It's important, I think, that we allow these transitions and emerging markets a chance and don't cuddle these things to death right off the bat because they're not good enough or green enough or there's not enough good data. I think it takes a special kind of courage, perhaps, to keep this simple. And from an investor point of view, we've got another reason to plead for that kind of core and more toggle idea, in that we, as I said before, you know, we are interested in aggregating these different outcomes or impacts across the portfolio. So you can't go overly granular with this stuff. I think the dirty secret, perhaps, on our part is that right now we don't even manage for impact, right? We only measure or try to measure impact. But if we were to acquire the expertise and the courage and the track record, perhaps, to manage for impact, then again, we need to make sure that things are comparable, and we need to make sure that issuance is not suffering from all these demands, all these investor demands. So again, we should not make this overly complicated, not more complicated than it needs to be. And then still, it's difficult, of course, to ascertain that a green bond from Russia is a bona fide green bond. But it won't get easier if we ask for the moon. I think we should go back to basics, perhaps, in this case. And basics in our case is, what's the impact? What is the actual difference this thing is going to make?
Interesting questions. We're coming towards the end, folks, of our session. So I'm going to ask you all for a sort of final comment about this going forward. We've had a few questions in the chat. I'm not going to ask for a detailed answer, but just alert you. Someone asking, Luciana Moza de Souza, in fact, in Brazil, asking about, should we be seeing the reports of negative impact being included in the reporting of issuers? I guess this picks up this issue of how do we assess the issuer, the entity, going forward. I will refer everyone to the launch of our entities paper on Friday, which will complement the thinking done at the Green Bond Principles about this, and you'll see a lot more coming from us in the future. But just let's get down to brass tacks. We've got some ambition here about where we need to go for entities linked to use of proceeds. But as you say, Timothée, it's a process. It's about a change process. It's not about from tomorrow morning we will only do X, Y, Z. So perfectly understood. Implied in this is what I'm going to call the really exciting development of maybe fixed income investors start getting engaged in the way the Climate Action 100 Plus has been doing on the shareholding level. Maybe that's the next stage. Maybe if Piet, we take you and a whole bunch of other fixed income investors to go and visit a government that's looking at issuance and talk about their program. And there's a acceptance of the bond, but there's also we want engagement about what you're doing. Maybe we're going to go and visit the Indian Ministry of Finance when we hope they look at doing a green bond early next year going forward to have that discussion. Maybe these are things which we're getting to in this market. And let's face it, this has not been normal, right? I mean, Timothée, engagement practices in terms of fixed income have not been the norm in the past. It's more of a passive market when it comes to this going forward. So give me your final thoughts. There you go. I've thrown an idea to comment on. But what I'm after is a reflection. Where are we going to go? What's going to happen in the next year or so? Online, we've got 110 countries represented on this particular conference. People from all around the world, they want a clue. They want a sniff. How are they going to make their bonds work if they're issuance? And if they're investors, what they learn. Give them some advice. Let's start with Luca.
Well, I was unprepared. I went last time.
Luca.
No, but I think, to be honest, Sean, I think we will continue to see progress, right? And I think we will see different speeds, to be honest. We will see some areas more developed, more sophisticated, which will push the boundaries of impact reporting and so on. We will see some markets entering the green bond. And as Piet was saying there, we should maybe not elevate the bar completely initially, let them come in and then bring them up. So that's for me, but everything will move, that's for sure.
Doris.
Yeah, maybe this is not too encouraging, but something I'm from time to time miss when talking about green bonds and emerging markets. I mean, people have to be clear about it. Emerging markets can only green bonds from emerging markets in the local markets can only fly if there are already developed capital markets. So the green bond cannot, at the end of the day, be the solution for a lack in developed capital markets. And investors, they do not only look at green, they look at credit risk, they look at FX risk. Sorry, I'm not trying to be too negative. I think this is also something we always have to keep in mind, and we have to tackle the whole package. There is so much attention now on the relevance of getting emerging markets up to speed on environmental issues. We can also see it as a chance that investors start looking more intensely at emerging markets, and that solutions for other risks also in this kind of discussion, which are getting more and more intense, can be found.
Good point, Doris. Although it's worth noting that about a quarter of all green bonds are from emerging markets once you include China, which of course is the largest emerging market. But although transparency is much better in China because the regulators have really pushed it hard. They have tougher rules we have in Europe. But interesting point. The bulk is still the big issuance is going to be developed markets, and it's going to grow as the US enters the market at scale this year. But let me go to Timothée. Just final reflections. You're on mute, Timothée.
Okay, I hope that's better now. No, the green bond is really a financial innovation for the greater good. And to pick up your point, Doris, I think if you want to do more in emerging markets and what is today the frontier of this green finance industry, we need to find and develop the right structures. It can be green securitization, it can be green private placement, but I truly think that additionality will lie there as well. Second wish is that be it for special program in securitization, private placement, and the likes, or for the well-developed capital markets, we should all focus on real-world decarbonization. So green bond has been a great success in terms of market growth. We need it to be a great success in terms of actual impact on the ground.
Maria.
On the same lines, I think we are seeing, in particular Latin America and the Caribbean, increasing the market. The market will increase, but the challenge then is that this increase has the two effects of the two previous speakers. On the one hand, truly develop the local capital markets, that becomes a true opportunity for the capital markets to be improved, but also that eventually this becomes more credible and really something that we can demonstrate that is actually making a change with regards to the commitments on Paris alignment. The challenge and the difficulty I see, particularly in Latin America, is that whereas the market is booming, there could be also a problem of credibility of the market if that is not well done. So I think it will be a very important role now to support that the market is more transparent than usual and that there is more clarity also that the impacts and what is done really truly is resulting in reducing greenhouse gas emissions, in not making negative impacts, in actually addressing climate change risks.
Great points. Piet, to take us out.
Yeah, nothing really to add there. I think we could steal a page perhaps from the discussion in the equity markets between alignment and additionality. Recently, Freshfields came out with a real good report on that, because I do believe that is going to be the next big wave, right? I mean, we've looked at the use of proceeds. Obviously, this is a new game in town. It's much harder to standardize, but ultimately, this is the one thing that keeps the green bond markets afloat. And, you know, again, I would like to plead, as we do with a group of Dutch financials under the auspices of the Dutch Central Bank, we try to arrive at a core set of impact indicators by which you can monitor this development and hopefully manage eventually for impact, but all by pension funds like PGGM that aren't really created for this, right? We do this as a secondary objective. So there's always going to be a desire to keep this easy.
Indeed, a critical issue. This whole market, as you know, everyone, has grown on the back of transparency and reporting. It is critical, it is fundamental, it provides comfort. We need to be able to see what people are doing. If they promise it, we need to know, please, and report afterwards. That's what you've been hearing about today. But it's changing. One of the things that's changing is an understanding of the necessary ambition that we need to achieve to address our really severe climate change challenges. And that's exemplified by the commitments of all the major economies to tough 2030 targets. So how do we know? We need transparency, but we need to understand ambition, and we need to understand entities and how they're transitioning as part of it. The exciting thing you heard today was about this idea of looking at the entity and maybe, by implication, the engagement of fixed income investors coming forward. You're going to see a lot more about this in the coming year, everyone. It's fantastic. But in the meantime, please join me in thanking our speakers, Piet Klop, Doris Kramer, Timothée Jaulin, Luca de Lorenzo, Miguel Almeida, of course, and Maria Netto. Really interesting panel, fantastic. There's reports around, there's stuff coming out of the GBP from Doris's working group. Climate Bonds is publishing in this area, which you're going to see a lot more, including our entities paper on Friday. Keep an eye on that. And let's see if we can make this a turbocharged, exciting market that we can actually have confidence in, continued confidence, and doesn't get whittled away by weak promises and weak ambition. That's the challenge. Thanks everyone for joining us today. Really great to talk to you again. From Chukwamana, who I spoke to recently, JP Morgan, honestly, it's a story of change amongst all these institutions, the extent to which they're grappling with how they can contribute to it. Thank you for sponsoring this conference.